Hello, gamblers, gamblettes. Welcome to earnings season, where you're not going to get any free drinks, but you probably are going to walk away empty handed just like you would in Vegas. In today's video, though, I'm going to be sharing my earnings strategy, so hopefully you don't walk away empty handed. And so far, this earnings strategy has worked out somewhat well for me. Last week, I ended up doubling my money on Charles Schwab, but then the week before, I ended up losing all of my money on bank puts. So we'll see how this plays out. The first step in my strategy, let me shrink myself down and then go to Thinkorswim for the charts. I'm going to look at price analysis for the stocks that are having earnings. And for this week, the big name is going to be Tesla. Tesla right now is trading at $133.85. This is a 2-day 5-minute chart, but I'm going to switch over to the 1-year 1-day chart, which is probably the most significant chart whenever it comes to earnings season. I'm going to get rid of all the price levels that I had set up before, and we're going to start from scratch. Now, I want to look for price levels that stick out to me, and usually this is based on, now I want to find price levels that stand out to me. So, one important price level that is close to where we're trading right now is this candle right here. You can see that the candle is much larger than any of the candles after that, so that would be a candle of significance. So we're going to take the open and closing price of this candle, which was 136 and 125.35. We divide that by 2, and we get an average of $130.68. So that is going to be our first price level that we're looking at here. And for me, I like to color code this. I'll put it as blue since it's on the daily chart for myself. And then I'll adjust this to be 130.68. And we have our first price level drawn up. Now I want to zoom out, see if there's any other important price levels from the past, but it doesn't look like it because how far these price levels are above. So the likelihood of Tesla going from 133 this week all the way up to $195 after their earnings report is very slim. And we know that if we go to the trade tab over on Thinkorswim, and the expected move based on the options chain for the end of this week is $13.50 in either direction, which is about 10%. So that means that Tesla is expected to be between $133.50 plus $13.50, which would be $147 at the very top, and then $120 at the bottom. So this is the expected range that Tesla is going to be in for this week. So I'm going to draw this as a nice little square between $120 and $147. And I'm going to extend this out by 1 week because this is the 1 week expected move for Tesla. So this is our expected range, and we want to keep our price levels generally within this range. We can go a little bit outside of it if we expect Tesla to make a bigger move than what is expected for this week. And some other important price levels might be, say, this gap that was created from 1223 to 1227. And the low of the 1223 candle ended up being 121.02. So that's just within our risk range that we have, this gray box. And it was 121.02. I'm going to set this as blue again because this is a daily price level. And then there are some more important price levels way down here outside of where Tesla is expected to be. And the bottom of this gap from the high of this candle is $114.39. So I'm going to adjust this again to be blue and adjust this to be 114.39. So those are our 3 important support levels that we have. They're below the current stock price, so they are supports. Now we want to find some resistance levels within this time frame. And some price levels that stick out to me would probably be this candle. It's another candle of significance because it's larger than usual, and it was a start to a pretty significant downtrend. So we're going to take the open and close price of this candle, 146.05, plus 137.80. We divide that by 2, and we get 141.43, which coincidentally, This ended up being the high for the very next day. So that is an important price level to be looking at for a resistance. Another resistance that we can look for is this candle right here, where it ended up going up a lot. It looks like probably in the morning, but then ended up selling off for the rest of the day. Whenever you have a candle that's structured like this, to where the entire body almost is red, and then you have a very small wick on the bottom, that usually indicates that the stock started very high in the morning and then fell throughout the day. This was on 118. If we go over to the hourly chart on 118, this is exactly what we experienced. All day it was just a sell-off. So if we go back to the one-day chart, this is going to be a significant price level, and the open for this candle was $136.56. So I'm going to draw this up, 136.56. Again, set this to blue because it's a daily. And maybe we get one more price level out of this. And I would say that this candle right here was also pretty significant. It kind of seems like the same thing that happened on 118, where it started very high in the morning and then sold off all day. And the close for this candle was 150.23. So this is slightly outside of the risk range. And the close for this candle was 150.23. So this was slightly outside of our risk range, where Tesla is expected to be by the end of the week. But there is some chance that it does go outside of that range if they have just a superb earnings report that nobody expected. So now we have our daily price levels, which are probably the most important whenever it comes to an earnings report, because these are the most sought after. But I also like to use the hourly chart. So if we go to the 20-day 1 hour chart, we're going to do basically the same thing that we just did for the daily chart, just on an hourly time frame instead of a daily. So an important price level that would stick out to me would be this candle of significance, but it's pretty close to the 130.68 price level, so we don't really need it. But another price level that sticks out to me would be the closing for the day right here, since it's in the middle between this 121 price level and the 130.68 price level. So the close of this day on 12/22 was 125.35, 125.35. And for my hourly candles, I'll usually set them to yellow just to differentiate them from the blue daily candles. Not necessary, but I enjoy doing it. And then this closing price level right here is about in the middle between the 130.68 and 141.43 price level. So another important one. And the close of this candle came out to be 137.51, which we just hit right on the head. This is going to be yellow since it's an hourly candle. Going to zoom back out of this chart. And now we want to look for some price levels that were formed more recently. So I think that this candle right here is definitely a candle of significance. The biggest candle of the day, really. So we're going to take the open at 134.15, the close at 130.72. We divide that by 2 and we get an average of 132.44. All right. So we will adjust this to 132.44. Make it yellow since it's an hourly candle. And we'll do one more price level. Maybe this candle of significance, definitely the biggest red candle of the day. And the open for this was 129.16. The close was 125.84. Divide that by 2 and we get a nice roundish number of 127.5. So the markets really love those half numbers, round numbers. Generally, those are more important than the rest. So we'll edit the properties for this, set it to 127.5, and this, again, will be yellow for hourly. All right, so now we have all the important price levels set up, and now we need to do the earnings analysis for how we think Tesla's earnings is going to go for this quarter. And the way that I like to do this is by looking at earnings history. The way that I like to look at earnings history is typing in the ticker symbol TSLA, earnings history, and the website that I prefer to use is marketbeat.com, because MarketBeat lists it in this nice little kind of spreadsheet type of looking thing, and it's easier for me to read. So we're going to look at the past 8 quarters, or the last 2 years of earnings. So we'll go 1, 2, 3, 4, 5, 6, 7, 8. So the first of the 8 was 26.67, so basically 27-cent earnings per share. 31-cent earnings per share. Move this over to where we can see. Would be nice. 48-cent earnings per share, 62-cent earnings per share, 68-cent earnings per share, 95-cent earnings per share, and 76-cent earnings per share. That looks to be all of them. Nope, just one more, 0.95 earnings per share. So a total of $5.02 of earnings per share over the last 8 quarters, which averages out to 63 cents earnings per share per quarter. So I'm going to write this down by taking a note on here. 63 EPS average. And now we want to go over to earningswhispers.com and find what Wall Street is expecting. So Wall Street is expecting $1.17 earnings per share. Earnings Whisperer is expecting 104 earnings per share. So since Earnings Whisperer is coming in lower, Tesla's probably going to miss on their earnings per share. And we can kind of confirm that by saying that their average earnings per share over the last 8 quarters was 63 cents. And Wall Street expects them at 117. I'll type in WS for Wall Street. And now we want to look at their revenue per quarter, because each earnings is going to be based on earnings per share, revenue, and then forward guidance. Those are the 3 main things to look for whenever it comes to an earnings report. If they beat these 3 things, then it's probably going to be a significant rally for the stock. And if they miss on any of these 3 things, depending on how bad the miss is, then it's probably going to sell off. But if we look at the revenue estimate, it is $26.16 billion. So we'll type that, 26.16 billion revenue, REV, Wall Street. And now we want to find the average revenue over the last 8 quarters, just like we did for the earnings per share. So if we go back to the Market Beat tab, go down by 8 quarters, 1, 2, 3, 4, 5, 6, 7, 8. Started with 10.7 billion of revenue. Next quarter was 10.39, sorry. 1196, 1376, 1772, 1876, 1693, and 21.45. So a total of $121.67 billion in revenue for the last 2 years. 121.67 divided by 8 quarters in 2 years was an average of $15.2 billion in revenue each quarter. 15.21 billion revenue. This was the average. And Wall Street, again, expects this to be $26.16 billion in revenue. Now, if we look at the last revenue, it came in at $21.5 billion. And the last earnings per share came in at 95 cents. And Wall Street expects them to do about 20% better on their earnings per share and about 25% better whenever it comes to their revenue. Now, I don't think that the margins for Tesla really changed by much because they didn't do the price cuts until the end of December, which was the end of the quarter. So if Tesla is able to meet on the revenue side at $26.16 billion, that means that they'll probably increase their earnings per share to the last one, 0.95, multiply by 1.25, which will be a 119 cent earnings per share versus Wall Street expecting them to come in at 117. So that would be about a 2-cent beat, which isn't huge whenever it comes to Tesla. Remember, Tesla is used to beating earnings like no other company. But if Tesla is able to get away with this, I would say that they would trade up possibly. But given that they've already seen a significant rally from around $101 at the bottom to $133, they've already gone up by 30%. I would actually be neutral for Tesla this week because they've already gone up a ton. They might beat their earnings per share, but that's if they're able to meet on revenue. So for my final step for earnings, after looking at the average earnings per share, doing my earnings analysis, and then doing my price analysis, it's figuring out which price levels that Tesla is either going to be above, below, or between, depending on my sentiment for the stock. Now, for me, I'm actually pretty neutral on the stock, again, because I think that they're going to have a small beat on their earnings per share. I think that they had a huge sell-off of like 60% within the last couple of months, but they have rebounded half of that to gain back 30%. So for me, I would actually be trading neutral for the strategy, but I think there's more potential for downside than there is for upside. And my reasoning for that is because it's going to be a very small beat if they can match the revenue estimate. So for me, I'm going to take a call credit spread for this trade. So that means that the stock can either trade flat or it can come down and I would make a profit. And now I want to figure out which strike prices to choose from. And a nice way that I can do this, if we go over to predictingalpha.com, this is going to give me the average move that Tesla has experienced with each earnings report. So let me log in right quickly, and I'm going to go to the earnings insight since we're looking for earnings. Type in TSLA, and then we're going to scroll down to look at the average move versus the expected move. So looking at the implied move was 8.57. The actual move was negative 6.65. So this means that the actual move was less than the implied move. For this earnings report, the realized move was actually greater than the implied move by a pretty significant factor, 9.78 versus 5.84. The one before that, the implied move was 713. The actual move was 323. Before that, it was negative 1155 versus 924. The one before that, 326 versus 391. So usually the realized move is less than the expected move, which actually works in our favor if we're going to be trading a credit spread. So this nice little historical analysis is very helpful on predicting alpha. A couple other important metrics will be the implied earnings move. So the implied earnings move for this quarter is $7.87. And this is some nice little averages. But my main thing that I look at whenever I'm using predicting alpha is looking at the historical analysis, the expected move versus the implied move. And another way that we can do this is by looking at what is known as IVP or IV percentile. So if we pull up this study over on Thinkorswim, I'm going to go out to the 1-year chart because I want to look at the IV for the last year. And the IV percentile is 63. So that means that 37% of the time over the last year, implied volatility has been higher than what it is right now. And usually, whenever you have an earnings report, Tesla is trading more so in the range of 80 to about 90 on the IV percentile. This one, it was trading at around 90. The one before that, it went all the way up to about 85. But before that, it was actually between 30 and 40 on the IV percentile. And then the earnings before that, IV percentile was the highest it had ever been at 100. So right now, implied volatility percentile is somewhere in the middle, somewhat high, but not extremely high like we've seen in past earnings reports. So that means that this trade could possibly work against us if the expected move is smaller than the realized move, and if that move is to the upside with a call credit spread. But I'm going to set this trade up. over on Robinhood, and we're going to finalize this earnings trade. This is the last step. So I'm going to do a call credit spread, which means that I'm going to sell a call option first, and then I want to choose a strike price that I think that the stock will be below. And I think that there's a good chance that Tesla will be below this last price level right before the expected move to the upside. So that would be $141.43. So I'm going to set this to $142, give it a little bit of wiggle room just in case. We're going to sell that call option in order to open it, and then we're going to buy a call option with a higher strike price. So we'll buy the $143 strike price, and for this trade, we're going to get 19 cents in credit at the bid and then 38 cents of credit at the ask price. Now with Robinhood, the bid-ask spreads will always be super duper wide and they will eat your lunch money. But I think that this trade could probably get filled at around 25 cents. So now I want to determine how much risk I'm okay with putting up for this trade. How much money am I willing to lose on Tesla this week? That is a great question. Each trade, I'm risking about $75, and I'm somewhat confident that Tesla is not going to go above my $142 strike price after their earnings report. So since I'm somewhat confident for this trade, personally, I'm going to put up $400. Now, my entire account size for options trading is around 10,000. So that means that I'm putting up 4% of my trading account on the single trade. So you'll have to adjust for your trading account size. But for me, I'm willing to put up $400 in risk, or 4% of my account. 400 divided by 75 risk per trade means that I can open about 5 of these. I'll get $125 in credit. And again, my risk is $375. So I'm going to review the order, submit the order. And since it's a weekend, this isn't going to get filled. But this is how I set up my earnings. This is my earnings strategy. Thanks for visiting the casino. Thanks for making it all the way to the end of this video. And thanking all my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.